Troops, we've just been talking about the different market makers as hammers, axes, gatekeepers, and stuff like that. And as you're looking at the slide up here on the screen, here's a list of how we're going to find the likely suspects. But rather than have you look just at this picture, I want to take you out to the website. So let's go out to the website here. Okay, so this is NASDAQtrader.com. Now this is put out by the NASDAQ for professional traders. So do you think this might be a fairly good site for you to come and visit? Yeah, sure. Now, you'll notice it's slightly different looking than the one in your book, okay, because you know these guys, they're always changing the websites from one thing to another. This is really a cool site. You need to come out and spend some time with it, just like the other ones. You know, you come out here and click around for an hour or so. You can see over here on the left, we have some quick links to different crossing patterns, what's going on in the ETFs, what are hot topics. You can find out about super montage and stuff there. Over here on the right is one of my favorites, is the news column. And it usually has some headlines up here for different trader alerts. Now, I'm mostly interested in head trader alerts. Let's have a quick look at the More tab here and see what else is going. Now, I'm not going to read these things to you guys, but I want to give you an idea, a taste for what you should be looking for. So here we see news is no longer available to the NASDAQ workstation 2, big deal. The market maker is approving Hunter World Markets, so it looks like we're getting ourselves a new market maker. Here's a head trader alert, which is going to be the elimination of restrictions on computer-generated quoting for listed securities. So they're going to lift some sort of a restriction there. We could go in and read that if we just clicked on it. How about this one? Now this one's hot. NASDAQ 100 update. There's going to be an index change effective the week of December 6, 2004. Okay? Oh, no, it says no changes. Ah, but what if there were a change? Wouldn't a stock being accepted into the NASDAQ 100 make it a high volatile stock? People would be really interested in it. But let's get back to our hammers. Okay, so let me go back here. So here we are back at the home page again. And if you look across, you'll see there's a data bar up here, and we're going to go to trading data. And if we scroll down about halfway, we can see monthly share volume. Everybody see that? Okay, so we're going to click on monthly share volume, and that's going to bring up a dialog box. And you can read all about it, but what we're doing is finding out who handles the most in a specific stock at any given time. Now let's go down to the dialog box, and you see that we can choose by either the issue symbol, okay, or by the market participant. Well, we're going to do this by symbol first. So, I don't know. Who haven't we looked at? How about Amgen? Let's type in Amgen in there, okay? And I just leave all the default values. I want all of the volume. So, you know, just give me everything, total volume, before and after market, and all that. So now we click on this view. Wait a second while it brings it up. Now before I scroll down, I want you to look over here on the right of this blue box. And can you see that there's only 132 market participants? There's 400 or 500 market makers, but only 132 of them are trading this stock. Okay, so let's scroll down and see what we get here. Okay, now the first thing it said in your book there to do was throw out all ECNs. Well, Brute is an ECN. How do I know? Because it has the letter C right next to it. Okay, and let me just scroll up here for a second. There's actually a table. Do you see the legend up here where it says market makers, M, NRs are non-market makers, okay, the reporting groups, we talked about NRs and all that, and C equals ECN. So we're going to throw Brute out. We're not going to look at that because we don't know who's on Brute. It could be anybody. It could be you, it could be me, it could be Goldman Sachs. But now as we look down a little further, let me just scroll down so we get that a little higher on the screen there for you. All right, we have Morgan Stanley, okay, and he has been number 2 last month, number 2 the month before, and is number 3 year to date. So far this year, he's been the 3rd largest player in Amgen. How about the next guy? We got Smith Barney Shearson. also a market maker. He's been number 3 this month, number 6 last month. So he kind of fell off Amgen last month. But how about this? Number 2 overall. So he's certainly going to be a power in this stock. And of course, here's our old favorite, Goldman Sachs. He's only number 4 this month, number 3 the month before, but he is still number 1 overall year to date. So needless to say, these 3 guys, Morgan Stanley, Smith Barney, Goldman Sachs, these are going to tell me who my likely hammers are going to be. Now, I don't say that they are the hammer today. We can only determine a hammer by going out and looking at them and observing them on level 2. Are they doing their hammer thing right now? Okay, now while we're here, I'd like to show you just a couple of other things. For instance, you'll notice these guys are all highlighted. And we've talked through the class that Goldman Sachs is one of the major institutional traders. So let's click on him and see how much institutional trading he does for Amgen. So once I do this, it brings up this little screen here. And if you look down at the bottom, you can see that the dark blue is the total share volume, but the, I don't know what color green that is, ugly green, is block volume. What is block volume? Well, a block is considered 10,000 shares or greater and is usually assumed, not always, but is assumed to be institutional traders. Hey guys, there are some individual traders who throw around 10,000 share blocks, but who really uses it? Who buys 25 and 50,000 at a time? Yeah, right. Yeah, absolutely. Yeah, Fidelity, Janus Fund, all those guys. Well, here we can see that Goldman Sachs is doing an awful lot of trading for himself in much smaller than 10,000 share blocks. Look at all this volume compared to the institutional. This is odd, but this is kind of curious. This is why we go out and look at these things. Now let's go back for a second and compare it with one of the other guys. We didn't get quite down this low, but how about Merrill Lynch? We know Merrill Lynch is primarily a retail seller, so we wouldn't expect a lot of block volume there. But let's go see. So let's click on that and take us out and show us that same kind of graph. And wow, look at the difference here. Can you see over here, particularly in the last couple months, Merrill Lynch has been doing a tremendous amount of block volume in here. Okay, sure, they handle different funds, pension funds and 401ks, SEPs and stuff, but it looks like they've gotten some pretty big contracts for institution, and yet the public isn't doing that much trading in Amgen. Again, if we were to select a different stock, we may find an entirely different scenario. So this is how we can start to compare activity in here. So let's go back, and one more time. Again, our 3 hammers are going to be Morgan Stanley, Smith Barney, and Goldman Sachs. But before we go out and test those on level 2, let's go up here and play with this box one more time. Now last time we did the issue symbol. What if we wanted to find out who was playing in a specific, or who was playing all what stocks? Well, here we click on market participant and we put in, how about Goldman Sachs? And we click on view. Hello, view, come on up. It's building, here we go. Okay, so now you can see down here in the blue again, Goldman Sachs plays 2,413 of the 3,500 stocks listed in NASDAQ. And here they are in order. Now, the order here isn't quite as clean because some of them are smaller priced and they also have different focuses on it. But you can see certainly that Goldman Sachs is trading last month 61 million shares of Intel, 49 million shares of Microsoft, 30 million shares of Cisco. But then as we scroll down, it drops off very, very quickly. And we're still in the millions down here. Let's go all the way to the bottom of the page. Can you see, guys, down here in the very bottom corner that there are 25 pages? Okay, remember, there's, what was it? 2,400 stocks here, so it takes up a lot of pages. Again, if we go in here and we were to click on Cisco, okay, now this would tell us again. Now you see the difference between Amgen that we looked at and Cisco. Now in Amgen, Goldman Sachs was not trading a lot of block volume, a lot of institutional interest. Here we see just the opposite. Goldman Sachs isn't trading very much Cisco on their own in the blue. A lot of it is devoted in the green to the institutions. Everybody got that? Yes, it is. Yeah, I highly recommend this site, and it's why it's on one of your top best 10 sites in your handouts. Okay, so everybody remember how we did this, okay? We went out here to trading volume. We then picked up monthly share volume. We chose our symbol of the stock we want to follow, clicked on view. We threw out the ECNs, and we looked across all 3 time periods offered. Last month, 2 months ago, and year to date, to determine who was the biggest and most likely to be a hammer or an axe in our stock. Any questions? Okay, let's go back out to the live platform. Alrighty, so let's talk just a little bit more about the hammer. Again, some platforms have this number best or hammer counter, but we have to be very, very careful not to buy into it wholesale. The thing that's going to help us the best is simple observation. And hopefully at the end of the day, when we have some time to really focus on the level 2 in the market, and we get some real excitement towards the close, I'll be able to demonstrate this for you. And you'll be able to see clearly who the hammer is and how they actually control the price. It's fascinating, but again, I can't take a pot shot at it and say, okay, well, there's GVRC at the inside, or almost at the inside, at 24.24. He's showing 1,000 shares. Which way is he trying to influence the market? Okay, well, we don't know until we look at the bid and see how far down he is. But if he's only showing 100 shares on the bid and he's showing 1,000 on the 24, then he's trying to influence to go down. So he really wants to buy it, so he really thinks the market is ultimately going up. Okay, so that's where you have to think this thing through a little bit. Okay, let's go back to the PowerPoint and look at a couple more examples. Now, this is a little bit older slide, but it really gets the job done. Here we can see, and again, guys, you'll hear all these different names. Gatekeepers, axes, hammers, they're all synonymous. They're all who's the powerhouse in this stock. Now, in this case, we can see that Goldman Sachs is sitting over here at 41 1/8 or $41.12, okay? And if you notice, it has a timeline on it. It says that he posted his bid to buy there at 14.13. Well, if you look down the next level, you'll see that the most recent bids have been at 14.15. So he's been sitting there for 2 full minutes of just buying 41 1/8. Okay? Now think about that. Cisco streams at about 60,000 shares per minute. So there's 120,000 shares of opportunity. I'm not saying Goldman Sachs bought them all, but there's 120,000 shares minimum of opportunity for him to suck them up. And if you look over here at the prints in the right-hand column, you can see, sure enough, that all these prints are coming through at 41 1/8. He says he just wants to buy 1,000. But I've added them up, and there's just what you can see on the board here, adds up to 10,000. So we know that he's not necessarily being truthful with us, okay? He says, I'm only displaying 1,000, but I'm a vacuum cleaner. And he's just sucking them all up. Anybody who wants to sell right now, he says, bring it on. I'll buy it. What does that tell you about his view of this stock? It's going up. Why would he buy something if it's going down? Alrighty. Now, it may only go up for the next few minutes, or it may go up for the next few hours, but he wouldn't buy it if he thought it was going to go down immediately. He would buy it later at a cheaper price, wouldn't he? Okay, so here we start to see where he would be more or less, in this case, what? A gatekeeper. He's holding the market up. Now, he is the support. He's standing there like Atlas, holding the world up. Okay? What if he were suddenly to cut his bid and drop away? boom, the price would come down because there's all this selling pressure. Look at all that red in the prints, okay? This thing would drop, okay? How far? Right to where he grabs it again. And he can keep playing in this game. But I maintain right now what he's essentially trying to do is suck it up to take it up, okay? And if he stays there long enough, he will simply wear out the sellers. And Goldman Sachs has that kind of horsepower. They have enough money and enough resources that they can sit there and say, okay, we're going to buy it all. You know? Yes, sir.
Do hammers trade for the day, or are they thinking longer term?
Okay, the question is do hammers trade for the day? The answer is yes. Now, at the end of a day, you may find a hammer trying to collect inventory for tomorrow. But basically what they're trying to do is play this elephant rock. Okay, so they're trying to make whatever the spread is, but it's not the mathematical spread, it's the hammer spread. Ready? Let's take a look at another one and get a little bit better idea. This is another gatekeeper type action. Here we see Merrill Lynch selling $3.35. He says he wants to sell 1,000. Again, if you look at the prints, all the green prints are 35s. People are buying and buying and buying and buying, and Merrill Lynch has enough inventory, he can just sell it. Sell, 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 and what do we got up there? 28,000 shares can be seen in the green alone. So no matter how much people wish to buy it, you can see that there's a whole list of people over there on the bid at 334 who would like to buy it at wholesale, but they're not being filled. The public is buying from Merrill Lynch at 335, and with the exception of just a couple of red prints up there, everything is coming from Merrill Lynch. Okay? And so the public is really hitting them and saying, man, we want this Marconi, PLC, whatever it is. Marconi says, this has got to be the greatest stock in the world. We want it. The other guys over there on the left, Lehman Brothers and National Discount and Schwab and Spear Leeds Kellogg, they would like to buy it a little cheaper, but they can't get it. Nobody's selling it to them, okay? Again, here we have Merrill Lynch putting his hand on the top of the market. You ready? What would happen if Merrill Lynch stepped back? Well, then the price would jump up very, very quickly until he put his hand back on the lid. You ready? And I guess, again, these 334s would get left in the dust, wouldn't they? Suddenly people are selling it at 337 or 339, and these guys will now have to raise their bids, and therefore, effectively, the price is going up. But why is Merrill Lynch selling so much of it? Does he really think the price is going up, or do you think it's time to get out of Dodge?
Time to get out.
Yeah, he bought it at $2.25. He's selling it for $3.35. He goes, how much further can it go up? Let's just dump it and take our profits. He's a smart trader. You need to be smart traders. So now here's a little bit better picture, okay? And if you look over here, you see on the left-hand side, we have Merrill Lynch at 2140, okay, at the bid in the red box. And on the right, we see him at the inside ask at 2152. So here's Merrill Lynch playing a 12 cents hammer spread. And you can see, again, he's displaying on the ask 1,000 shares to sell, but he's only saying, I only want to buy 100 on the bid. If he sits here and sells enough, okay, at the 52s, or just stays there long enough, people will say, well, he's not moving, and they'll start trying to get out ahead of him. And this will cause the price to start to fall back down. Now, when it gets down to 2140, Merrill Lynch will actually start buying. And when he gets enough, he'll then change. And all of a sudden that on the bid will become 1,000 and the ask will go to 100. And now they'll say, oh, look at all that support from Merrill Lynch. And he's not leaving. So now the price goes back up till it hits the 52 and he sells it again. Okay? Now the question that Paul had earlier is how long does this take? Alrighty? Now, I don't know Altera's stock, but it's 3 million at this point, and it's 12:37 in the afternoon. Okay, so there's only a couple of hours left. I would probably think this might take as much as 10 minutes to get it to go from 40 to 52, and another 10 minutes to go from 52 back down to 40. Now, interestingly enough, if you look at this, does everybody see up here that the prints have just now started going to 51s? Okay, notice the red and white prints at the top. You ready? It's starting to work as these guys stay there. Now, how long does a market maker have to show his size? 5 seconds. You ready? So every 5 seconds, and people, they just mentally count it: 1 Mississippi, 2 Mississippi, 3 Mississippi, 4 Mississippi, 5 Mississippi. He refreshed. 1 Mississippi, 2 Mississippi. He's still there for another 5. He's still there for another 5. He's hanging out. He's controlling this upward thing. Even though there's other players up there, there's Bard and UBS Warburg and JP Morgan and Prudential. All these other guys are sitting up there showing 100 and 100 and 100. He's showing 1,000 and he ain't moving. Okay? Alrighty. Let's talk. We've already had one episode on shorting. We've talked about the rules and regulations. If I can refresh you real quick, guys, remember, we're not allowed to sell on an uptick. Excuse me, we're not allowed to sell on a downtick to the bid. Alrighty? Once that arrow goes down, and that means on the NASDAQ, that's a 1 cent decrease in the bid price. On New York, it's a penny less on the prints. So the two markets are controlled differently. Yeah?
Is that also true for ETFs?
No, ETFs are not stocks. They're exchange traded funds. They're not under the uptick downtick rule.
No uptick.
Right, so like QQQs and SMH and diamonds and spiders, you can short them on a downtick as long as somebody will buy from you. It's legal. Okay? In fact, that's one of my standard routines. If I look out the window and I see a large nuclear cloud on the horizon, I automatically short the Qs and then go to the bomb shelter. So when I come up, I've either made money or I have to grow corn, one of the two. Anyhow, if we're going to get short on a downtick, we have to offer a full penny above the inside bid reference price. Okay? Now that being said, let's look at some of the secrets of the tactics of shorting and how we have to think of it, because shorts are wonderful. If you can get them, you'll make 2 and 3 times as much money on the downside as you will on the upside in the same time frame, okay? Because they fall so much faster. Let's talk back about entries. We know that our general rule is to buy near support and sell near resistance, okay? If we're going long, we have a number of different opportunities, as you guys can see displayed up here. Certainly on the bottom support line, we see our number 1 position, buy near support, okay? If we get up to number 2, we should be selling near resistance. So if we were to buy a number 2, okay, that would be highly aggressive. Why? Because 75% of all breakouts, up or down, breakouts or breakdowns, fail. 75%. So that only gives you 1 in 4 chances of being correct on a breakout. Not great odds, guys. All righty? So if you're going to try to buy a number 2, you're going to have, you may find you're just coming right back underneath that resistance line just a minute or 2 later. All righty? A number 3 would also be a fairly aggressive buy. But at least we are now broken resistance. We just haven't had a retest yet. You ready? The next one up there is number 4. And this is what we call our hook of confirmation. And again, as we talked about the gap play, let's go up here on the board for a moment. If this was resistance and price broke through it, does it now become support?
Yes.
Yes, absolutely, okay? And if we looked at this vertical distance up here, and let's just say it was $1, well, what would I be looking for in retracement strength? Well, I'd be looking for a fall of 38 cents or less. Just like we looked at our gap, if it only comes down 38% of the way and then starts to move back up, we would say it's strong. And that's where that number 4 on the screen comes from. Ready? Conversely, if it fell down here to 50%, this is 38, if it fell down here to 50%, I would be reluctant to buy too early, because now we know it's so-so. We don't know whether it's strong or weak. It could be heading back down. And of course, if we saw it coming back more than 61.2%, well, then it's probably going to be a fakey breaky. And if anything, I might want to even think about getting short. Does that make sense? Mm-hmm. So this section in here is what we call the hook of confirmation, and kind of looks like a fish hook right here, an upside down one. If I did it this way, okay, now it looks more like a fish hook. You ready? So what we want to see now, according to the chart up here, we could also wait for this thing to break out above its little previous high, which is now a minor resistance line, and we could buy a number 5. Well, isn't a number 5 analogous to a number 1 down here? Yeah, because we've gone through 2's resistance, we definitely have support below us again, just like a number 1. So number 5 is very conservative. What did I tell you guys about risk-reward scenarios? You can't have more reward without accepting more risk. And conversely, if you're not willing to accept risk, you must settle for less reward. So we can see here that if we were to buy a number 2, we have a great deal of profit, but we're taking a lot more risk because it could be a fakey breaky. If we buy a number 3, we still have more reward, but again, it has no confirmation in it. It could still be a fakey breaky. You ready? 4, we start to get confirmation in it, but now we've eroded this much of profitability. But we have now better chances of being right. So this balance, this continuous balance works. Now, Mike, you started off this talking about the secrets of shorting. Why are we talking about buying? Well, because I want you to really look at this when I show you the next one on shorting. You'll start to see that there's a very, very subtle change in where we get in and how we value them. And the reason is because, as we all know, the market is driven by both fear and by greed. And of the two, fear is the much, much stronger emotion. So it's always easier to be a buyer than it is to be a seller. And when we sell short, we're sellers. Well, Mike, what do you mean it's easier to be a buyer? Well, there's always somebody who's a little bit afraid, who wants to get out of a position and is always hunting a buyer. So it's not a 50-50 deal. There's always a little bit more pressure to get rid of something. So therefore, buyers have a lot more opportunity. Therefore, it's easy to get into a long position, but when it comes time to sell it, it's hard to get out. And that's why if you hold on to them too long, you start to really take some big hits. Conversely, if we start talking about short selling, it's hard to open the transaction with a sale, but if it starts to go against us, it's easy to buy. There's always somebody looking for you. So longs are easy to get into, but hard to get out of. Shorts are hard to get into, but easy to get out of. Make sense?
Unless the shorts are getting squeezed.
Well, but if you're a buyer, you know, there's still a lot of sellers out there. You just have to buy it at a higher price. Now, like I said, when we start to go short, we start to see a bit of a difference in our scheme of things. Alrighty? Now you'll notice that the number 1 is still logical. The rule says sell near resistance. So number 1 would still be our spot to sell at, okay? But you'll notice that number 2 is even more aggressive. We've hit support and the price is moving up. Well, guys, we're sellers. If we're selling, who do we need? Buyers. Very good. We need buyers. Alrighty? So where are you going to find them? Well, when price is going up a little bit. Well, this is crazy, Mike. You want me to sell short when the price is going up? Well, we need something to help us along here. Now, the slide drawing isn't all that good, but what if I put it up here on the board like this? What if we saw price channeling, and all of a sudden it started making a series of lower highs still within here? And instead of showing the 2 on this side, we put the 2 here. Now we have a downtrend in place, and we have what we're going to call a descending triangle ultimately. So we're squeezing the buyers into a corner. Something has to happen. Ready? So we can afford to be a little bit more aggressive because now our control is the downtrend line. And of course, what would our stop loss be? Anything above that downtrend line. I say anything significantly above it. We don't want to prove ourselves right. We want to prove that we were wrong. So 5, 10 cents, something like that. Yes, sir.
You said earlier this is chess, not checkers. So you're thinking these 2 moves ahead here. You're thinking, okay, it's really on a downtrend, but you're catching it on the...
Exactly, on a slight up retracement, but I'm really expecting it to break major support. Okay, that's what my expectations are. Yes, I'm looking into the future. Alrighty, so now we can get short as we approach the number 3 here. Why? Well, the very line down there, a support line, is defined as an area that finds more and more buyers, okay, that support the resist the downward pressure of price or support the price at a given level. So we know that we're going to find buyers right at the support line. Again, number 2 and number 3 is fairly aggressive because we don't know that it can break support. We're just setting up for probability. Again, as we start to do this, our stop loss now has moved down to directly over the 3, okay, but is just on the other side of that downtrend line. Now here's the wrinkle. Once it breaks support, okay, getting a number 4 or somewhere between a 3 and a 4, if you remember on the last one, the 3 was just on the other side of the line, okay? Getting opening a short there is slim and none because everybody knows it's going down and everybody's trying to sell and we're hunting fewer and fewer buyers. So the competitive situation is that our odds are going against us of being filled. Not that we're incorrect, it's just that we may not get somebody to actually buy from our sell position. Okay, and again, a number 5 is incredibly conservative, and it may be very difficult to get filled. But it is again analogous to the number 1 selling near resistance because we have broken now 2 support lines. But does that mean everybody in the world knows the price has gone down? Uh-huh. Now there is one opportunity once we break support, and we kind of whimsically talk about the pioneers, okay? Pioneer areas are created by 2 different concepts in the market. The first one, of course, is what your brokerage industry has been telling you all your lives, average down. If you liked it at 20, you gotta love it at 15, okay? You know, so let's buy some more down here, you ready? Well, that's not really a very good idea. That's not a great idea. If we're gonna do anything, we're gonna average up. We load the bus when it goes in our favor, and we get out if it starts going against us. Just about the opposite of what they told us. How many in here would be happier if you had done just the opposite of what your brokers told you all your life? Yeah, little unanimous hands there. Anyhow, the next thing that creates pioneers is what? People who think they've seen the bottom. And what's the old cliche? If you think you've seen the bottom, you're wrong. If you know you've seen the bottom, you're too late, okay? But there's always somebody who thinks they've found the bottom. So these 2 combinations, averaging down and bottom seekers, okay, tend to create what we call a measuring object. A measuring object is generally, in this case, 50% of the break of support finds the pioneers. As you see on the chart up here, which is kind of exaggerated, we see that it falls 2.5 points before it finds pioneers. If that's 50%, then we can anticipate that there's another 2.5 points before it's going to find major support. Now, needless to say, guys, if I missed my chance of getting short there at the number 2 or the number 3 right at support, okay, and I know I have $2.50 left, I'm going to work real hard to get short there where the pioneers are. On the other hand, if it fell 20 cents before it found pioneer support, I'm not that excited about working hard because it's just not rewarding enough. By the way, I didn't mention, anybody know what a pioneer really is? Pioneer is somebody who goes off into the wilderness. They don't know where they're going. They don't know what they're going to find. And when they come back, they have 3 arrows right here and a real tight haircut. Okay, that's what a pioneer is. Okay, so now let's take a look at a couple of these guys. You start to see them in action. Okay, up here we have what? Citicorp, and we see it on the 9th, the 10th, and the 11th. On the 9th and the beginning of the 10th, you can see how narrow a range it was holding right along the support line there of a basically call it $49. Another nice round number. Always remember that, guys. Round numbers are natural support and resistance levels. Okay? Joe just loves it. He never thinks about buying at $49.13 or selling at $48.87. He's going to buy it for 47 and I'll sell it for 49. I'll buy it for 49, I'll sell it for 51. And on his big days, he goes, you know, let's be real traders. We'll make it 49.50. Okay, that half point, you know, I'll put in a limit order for the first time in my life. You know. Anyhow, we can see, and let me find my laser pointer. We can see on the 10th where a little after 11 o'clock, the thing starts to break down. And if you look carefully, you'll see one big candle, a green candle, right in the middle here, which is about 50% of the fall from here down to this shadow down here. So here's a small area of pioneers right in there who got in, and we could have sold this thing short on the break at about 48.75, and it got down to about 48.30. So there wasn't that much of a move in here, about a 40-cent move, okay? However, if we look on the 11th, okay, we see the thing finally break down past the lows of the 10th, already, and here are our pioneers down here. Now the fall from here to here, and then from the top down to here, are both 75 cents. Well, gosh, guys, I don't know about you, but even with 500 shares on any one of those, that's $350 that is kind of pre-programmed. If I missed it here, I could get it here and know that I still have another 75 cents to work with. Ready? Well, Mike, how come those aren't the pioneers? Well, they were. They just didn't come back. They got a little too scalped already. But what if I got short up here and I add it to my position? Am I unhappy? No. Okay. I just realized that I fell from here to here is 50 cents, and then I only got about 50 cents left, and I might be getting out a little early. That's all. That's the worst that's going to happen to me. Okay? The good news is that if I see and really properly identify, now realize we're on a 5-minute candlestick here, guys. So if we can identify the pioneers, we got 1, 2, 3, 4, 5, 6, 7 times 5, 35 minutes to make this decision. This isn't a snap decision. We don't have to go, oh, is that a pioneer? Yeah, jump on it. No, we got 35 minutes to watch it start to build up or start to weaken. Okay? And again, in 35 minutes, can I get a crosshair and measure from here to here and know what the numbers are? Sure. I can go out and have a ham sandwich and come back and do the measurements. Yes, sir, Paul.
Is the angle, the decline, is that another indication? Is it that that's a pioneer there? 45-degree angle roughly, or
What, the one going back up?
First leg, and then it hit the pioneer, and then you got the other leg.
Oh yeah, the sell-off angles of both will be very, very close, if not identical, very, very close to each other. Okay, but I don't know that that indicates the quality of the pioneer. But the pioneers, as you can see here, they bring this thing up from, I don't know, maybe 25, 30 cents in here. Okay, they generally pull it sideways rather than actually retrace much. How could I also look at this? Could I look at this as a hook of confirmation? Could I look at the fall from the top up here at 48.50 and see this retracement is far less than 38.2 back up? Let me put that on the board so you guys see what I'm talking about. If we had the fall at 48.50 and the thing fell, and then there was a retracement of pioneers, and this retracement back up was less than 38%, wouldn't that indicate weakness?
Absolutely.
Absolutely. So now we could start thinking about getting short, and then of course we'd measure from here to here and start licking our chops from here to here. Okay, so whether it's pioneers or you see it as a Fibonacci weak retracement, either way it works. I think pioneers are more fun. Thinking about those suckers wandering out there in the wilderness. All right, let's look at a couple more. Now, here's a daily chart, alrighty, and you can see a couple of things that are going on in here. We have a little bit of an up run in October, November, and December, and we kind of get a little double top in here, alrighty. Thing comes down, hits support, bounces back up, and we start making a series of lower highs. Now, the box says this is our first short opportunity. Our real first short opportunity was probably the day before above support, but then we're going against our general rule. Remember, you have to be a little bit more aggressive if you want more profit, okay? But the thing came down, bounced up, had a long selling topping tail on the green candle, and then it opened up high and sold off virtually most of the day. So on this particular one, I actually think this would be my first shorting opportunity. Certainly, this has a good one in it. Why? Well, even though the candle is red and there's a lot of sellers in it, can everybody see even above my blue line that there's a little bit of a shadow sticking up? So at some point, the buyers did have it higher, okay? Now, if that happened in the first 15 minutes of the market, we missed it because we're sitting on the sidelines, okay? And we try to get short. But I guarantee during the course of the day, there was ample opportunity to find upticks, okay? So if we got short right here, just below the support line, which now becomes resistance, our stop loss would be right above that line by a couple of pennies. Perhaps this previous low on here on this green candle. Alrighty? So it proves that if it came back up, that we would get out, we'd take a small loser and look for another entry. Now in this one, here are your pioneers here. Okay? Because they describe about 50% of the fall from here to this really long shadow down here. So here would be 1, 2, 3, 4, 5, 6 days later is another opportunity to get short. So if we missed it here or we wanted to add to our position, we could. Alrighty? And of course, once we bounced down here and started coming back up, maybe we'd be getting out here, but we'd have some extra profit. Yes, sir?
Now you'd be looking to get in there where you just have the dot because you're hitting support. You're hitting support in there.
Right in here?
Or right in there.
Well, I'd be looking, A, to get in here, and then I would have 2 days to get in here.
But what's the trigger for you is because you're hitting this support here.
Right.
And you're anticipating that's going to continue.
That is going to continue. And I would start to identify those as pioneers. And I have a green day with a topping tail, but I also have a red day with a bottoming tail. So even though this is, the bears are in control of this red day, there is some buying pressure in there, isn't it? Now again, I know this sounds counterintuitive, but again, as a seller, I need buyers. I don't want to see price go up against me, but I need somebody who is willing to take this stuff I'm selling. And I'm selling them a load. Okay. Now again, we can see that a couple of weeks later, we have another opportunity. Again, we have a green candle, comes up, hits its head right on the old support, now resistance line, and the next day we have a red candle, but with a bottoming tail on it of buyers in there. Again, we could get short in here. Where are our pioneers? Well, here's the pioneers for this fall from here to here, okay? But this one would probably really scare the heck out of us, okay? People, I'll never tell you that anything works all of the time, okay? It doesn't. It's just that simple. Now, I can show you an awful lot of great examples, but I can't show it to you perfectly all of the time because it doesn't happen. Don't buy into that, oh, there's the pioneers, I'll just double up. No, you might get hammered in here, okay? But again, if I got short here, where's my stop going to be? Right on the top of that line. You ready? Where am I going to get out? I don't know. My first goal would be the October lows back here. That would be my magnificent goal. But I'd want to draw in some other support and resistance lines based on what I can see in the past. Okay, my S1, S2, S3, S4, S5, and I might try to achieve an S2 or an S3. I might not get an S5. That's a long way to go. Okay, so that was the big picture. Now, what does the small picture look like? Well, what does level 2 look like? Well, first off, we always want to look at all of our information. We want to make sure that we're making a good choice. Is the stock down for the day? Yeah, so we know it has some weakness in it. Ready? It closed at 84. It opened at 67, so it gapped down. It had 100% fill on the day, right? If it closed at 84, gapped down to 67, has traded up to 95, we've filled the gap 100%. So that's not really great. Okay, the low has been 26.16, which is a fair distance away from the previous close of 84. Are we closer to the high or closer to the low as we look at price? Closer to the low, not by a great deal. I mean, we're 15, 16 cents off the low, but we're also 60, 70 cents off the high. You know, I'd like to see it a lot closer to the low of the day, and hopefully we could break through that for a really great short, huh? But what else can we see? Well, where can we open a short? Well, we're on a green uptick and the stock is shortable, so that means we can do what we want. We can sell it to JP at the 34s on the bid. If we wanted to sell more share size, we could even slip a penny or two and go down and sell it to Inco or Ready at 32. But we don't want to do that, do we? We want to sell as high as possible. Could we also go over here at the 35s and offer it out? Sure. But the problem here is what? We're now getting into competition with other sellers. You ready? Now, if we look at the prints, we can see that they are taking some 35s in here. But 100, 300, okay. You know, our chances of getting filled at the ask rate at the moment are moderate. They're not good, they're not bad, they're moderate, okay? We do see some green prints, but there's only 100 or 200 shares. If I had to go out on island, there'd be 2,200 shares ahead of me. If I used another one of my member ECNs like ARCA, I would show up in here as ARCA with whatever share size I wanted to sell, but now I've expanded the box and I've shown more supply. And as I do so, less people are going to want to buy. That makes sense? So what is the bottom line down here? We got to make a decision, people. We can't wait too long because a downtick is only 600 shares away. If JP Morgan in here gets filled for 600 shares or he cancels his order, this arrow then turns red. And now I've had one door of opportunity been closed to me. I'd like to sell to the bid. It's smooth and easy. But once that arrow goes down, I am no longer allowed. Ready? So now I can only offer. Everybody with me? Good. Okay, so here's where we missed our opportunity. Again, the first thing we want to do is make sure that we got a down stock, that we're seeing some good news reasons to take it short, okay? Maybe check our news and all that. We look over things, we can see, unfortunately, that the arrow is now a down tick, okay? We can see that the bids are getting smaller. That's what we mean by crunching. People are either getting filled or they're canceling to buy it later at a lower price. There's also, on our favorite ECN island, there's already 2,100 shares being offered. On Inca, there's 2,600 shares. So we know that there's a lot of day traders who are already ahead of us. Okay? What can we do? Well, we could join the 16s and get in the back of the pack. But what's the reality of the situation, people? Is anybody buying 16s? There was one buy for 16 for 500 shares, and all the rest of them are selling to the bid. Well, Mike, they're selling to the bid. Are they selling short? No, they're selling long. They're not allowed to sell to the bid on a downtick. Sell short, excuse me. But you can sell long, can't you? Sure. So these are people who are dumping the stock. People have identified that this is time to get out of this, and therefore it must be a good, tasty short. How are we going to get in? What can we do? Well, what we want to do is think about where we're going to be in the future. Okay? So instead of trying to offer out 29.16, let's load our box up with 29.15, which is the inside current bid. Okay? We choose a route that we can offer out on, perhaps Island or Arca, alrighty? And we put our fingers on the short sell button. But we cannot pull the trigger until the 29.15 disappears. If I pull the trigger right now, I'm on a downtick. What's going to happen with this platform? Is that box going to open up and say, you were in violation of the short tick down rule? Or down tick short rule? Down, short tick, whatever. You guys are with me. And it said, would you like to offer a penny above? Well, by the time you say yes, the opportunity's gone. So this is a quick draw game, okay? You sit here and you watch the 15s like a hawk. The moment the 15s blink off, you pull the gun. If you pull too fast, you shoot yourself in the foot, and then you have to deal with that little box, okay? And you might miss your opportunity. You pull too slow, well, somebody's going to get in the head of the line ahead of you. And that's what I want you guys to think about, okay? Where are we? Do you want to stand in the old 16 line, or do you want to be first in the 15 line? And that's the concept here. We want to be first in the new line, okay? By offering 29.15, when that price level leaves the bid, I may just be first in the brand new line at 29.15 at the ask. Because after all, I'm offering to sell. All ready? Because can I sell 29.15s if they're not there? No, so I must be offering. What's the new inside bid likely to be? 29.13, or if somebody jumps in ahead, 29.14. But at 29.15, I will still be that magic 1 penny above the inside bid, minimum. Okay? Now, with some of the tools that we have on the platform, and I'll show you a couple of those, we can do some different stuff. Okay, we can trail it down and stuff. But opening a short is really a good move if you see this kind of a situation. Print's gone red, stock's already weak for the day, bad news just hit the news, and the only thing that's slowing us up is this downtick. Okay, so we want to try this once or twice, then we stop. You don't want to chase this thing to the bottom. Okay, and if you start chasing cars, people, it's not a rewarding thing. They'll fill you right at the bottom. Okay, so, oh, I'll get short, I'll get short, I'll get short, I'll get... Sure you will. Okay, oh, we're here. Found major support. So you got to know where support is, major support and stuff like that. You give this a couple of pennies, but don't chase it too far. Okay, before we get into the platform itself, let me just make one comment. How would you get short now? Okay? And after talking about this in quick drawing, everybody gets usually excited and says, put in the 52s, put in the 52s. No, it's a 2-cent spread. Look it over. Very good. We can go in with a 53 calmly without having to quick draw or anything else and still be legal. We'll be 1 penny above the 52 and we'll be the best inside offer at 53. Okay? And what are they just starting to print? 53s. So we have a high degree of getting filled there. Okay, while it is important that you do not chase a trade, shorts are valuable enough that you want to make a stern effort to get them, okay? So you want to try one or two different methods to get short, but don't chase it forever. Set yourself a limit. If I don't get short in the first 5 cents or the first 7 cents of my entry, just like we did on our trade plan, we said, if it breaks the S1, we'll get short at this price, plus or minus 3 cents. Okay, if we got it up high, that's great. If we got it down a little lower, that's great, but we're not going to chase it to the bottom. Alrighty? Remember that shorts need to be opened early and before they look like obvious shorts. Once everybody starts selling, we're hunting a very small growing pool of buyers, and getting filled is difficult. Now let's take a look at the platform. Okay, so now that we've talked about how to get short, let's go out and do it here. So again, the last little trick we talked about is we look up here and we see we have LLTC in here. Okay, now it's on a downtick, so if I go at market and hit the downtick button, or the short sell button, I'm going to get this window. Now I want you to read the window. Entering a market short sale on a downtick is a rule violation. Do you wish to continue by submitting a limit order for a penny above the current inside bid? Well, right now I'm going to say no, because I want to show you the first trick we just did. So, and of course, as soon as I do that, it moves up to 38.77. But let's go find ourselves a stock. I think we might see a little down movement in a couple of these. Yeah, that one's got too much share size on it. Whole lot of green arrows up there. And this one has too much share size on it. Let's see if we can find somebody else. Hang on tight, guys. No, I'm not going to play taser, no matter what you guys say. We just got to wait and find the right setup. Okay, perhaps I'd like to get short in applied materials. Okay, I cannot sell to the 92s, but I can load them up right now. So I have 92 in here. I put my finger on the short button and I watch. Now what I need is, of course, the market to turn down a little bit, okay, so that we can actually do this. And what does it do? It goes up on me. Okay, so I can't make this happen for you guys. All we can do is talk about it and wait for the right setup so you can see it. Now, why am I doing this? Well, again, if I'm a little tardy to the party and all of a sudden the market takes a real bad downturn, I may not be clearly set up with a perfect plan in order to get short. So this is a quick draw. Alrighty? It allows me to jump in there possibly. Remember, I'm going to be offering out. Now, while we're doing the setup, let me demonstrate just a couple of things about the platform. And so all I need to do is find a downtick. That shouldn't be too hard. Okay? Well, maybe, maybe not. Okay, so here's a downtick, okay? And the thing is jumping up and around here a little bit. My goodness, it's tough finding these shorts on a down day. All we can do is try, guys. Okay, so if I do a market short right now, and let's do it before it runs away from us. Okay, it says 13, 11, 12. That's on an uptick. Give me a downtick here. We'll get a downtick in just a second. As soon as we get a downtick, I want to show you how we're going to do this. Okay, there's our downtick. Yep. And of course I got in right at the 15. Wonderful. Okay. So here's our sell short, our downtick on a 12. and I'm going to sell short. I'm going to get the box. I'm going to say yes. Do I wish to enter a penny above? Yes. Okay, now, guys, I'm going to blow this up. Do you see that I have a sell short routed? Even though it says a limit order a penny above, what am I really at? Market. So this thing is starting to trail me down. Okay, so I'm really part of, okay, we got filled. We got the other 100 shares because it popped back up there for a moment. But where did we get filled? Let's go look at our activity log here. And the thing trailed us down. We entered it when it was 12 by 13, okay? And it sold us short at the 9. So it trailed us down from the 13 to the 12 to the 11 to the 10 to the 9. Notice that we got a partial fill even on 100 shares. Notice we got a partial fill even on 100 shares. 98 and 2 is that 100. We got them both at the 09s when it bounced down and bounced back up. Now, this is good and bad, guys. This is good and bad. Why? Well, because if we wanted to get, let's get this back on position over here. If we really wanted to get short because the market's tanking, that's great, okay? And we got it, but we don't want to chase it too far. So now let's buy cover on this and make ourselves a couple of bucks here. Let's go in here and see if we can buy some 11s. Now notice I have 200 short and I only have 100 in here. So I'm going to have to push the P for position. That loads me up to 200, and then we can buy it back. And there I am. I'm part of that, and we're out. So we made a couple bucks on that one. Now, here's the difference. Let's go find ourselves another down tick. Okay, now here's a down tick. What if I wanted to sell at the 45 on a limit? And I say, get short, and I say yes. Up, I got filled instantly, and I got filled at the 40.45. Now, why did that happen? Well, theoretically, okay, the way I did it, and we'll do it again here in just a second. We're got to wait for a down tick. Wow, we're starting to get hammered in this one. Let's get out of this, guys. Here, guys. Which way is this going? Okay, we're out. Okay, theoretically on a down tick, if I use limit in here, then the thing will limit me, will not fill me, but will put me in as a limit, which will stay at that price. It will not trail me down like the market did. Again, if I go in here at 16, rats. Well, I'll tell you, hunting shorts today is hard. Okay, if I go in here at 06 and hit sell short, okay, you see, here's my order. Let's blow this one up. Can you see I'm limited to the 06? Even if the thing falls down to $36 or $35, it's going to keep my fill at 36.06. So if we want to chase it, we have to open with a market, okay? And again, you see, I'm up here at the 36.06s already, and it's all the way down to 35.96. So this was a classic example. Alrighty? So I'm going to cancel that. I don't want to get filled here. So again, the platform can help you out if you think it through. We're on a down tick at market. I sell short. I say yes. I get the fill at the 99. It actually filled me, okay? Because there was a 99 available. It popped up a penny for a second and hit me. Alrighty? So now I can buy back the 99s and get out of this trade, or hopefully it's going to turn around and drop like a stone and we're going to be heroes. We're making a couple bucks here. Alrighty? So do you guys see the differences between, even though the box says exactly the same thing, okay, we've got to be careful about what we're doing here. Alrighty, let's see if we can get out of this trade. Things going against us a little bit here. Let's go in here, 99s, buy some 99s, and we're out. Okay, so again, if we're on a down tick and we want to play a fast gun, we load up over here and we watch the inside bid until it goes. I know I haven't demonstrated that for you. That one has too wide of a spread in it. Let's see if we can get this done once for you. Okay, we're going to load up the 09s, and as soon as the 09s clear, I'm going to hit the short button. And it's 10 by 09. I'm watching the 09s. Here we go. Get ready. Get ready. If we pull too early, we get that box. Bingo. Okay, now it's got me in there. Now, unfortunately, that's me right there at the 09s. Okay, I'm up here now. Ready? So we didn't get our fill, but it gave us a chance to get our fill. You see how fast that dropped off? That's why shorting is so wonderful, people. When the thing starts to drop, it drops much more fast than it goes up.